Okay, I just wanted to do a quick review of my mistakes in January. It's already mid-February, but better late than never, right? So let's start with one type of mistake I did. I was anticipating a bunch of breakdowns in a few overextended stocks. So one of them was Goldman Sachs. So he'd had a run after the Trump election, Based had another run. So I thought a little bit of a meaner version back to the maybe 50-day would just be very healthy for his stock. So I tried to short it for a couple of weeks. Um, and every time my risk was like $1, $2 to potentially make 10, 15. But I tried it like 4 or 5 times and it just didn't work. And I took a bunch of small losses, like 1,000 or two, well, like around 1,000 every time. I did nail it finally. Um, so I made some money, but I mostly only made back my losses from the previous weeks. Um, okay, and I did start shorting it back in December, but I also shorted it a couple of times in January before I finally nailed it. So there, looking back at it, there was really no reason to short it. It had a trend line. And even though I knew, like for example, this is the first trading day of January, like I already had this trend line established, so there was really no reason to short it before the stock actually broke this trend line. But I tried to anticipate it like in this area, which, well, obviously didn't work out until, well, actually finally did work out, but just waste of time and effort and mental energy. Same thing on JPM. Let's see, where is the beginning of January? So this is the first day in January. I did have this trend line established by then. And the same thing, I try to short it like on these days. Not on all of these days, but some of these days. Just no reason to do it. Another one is AMD. This one I also thought had two legs up. First leg, it was already extended over past 6, 7, 8 months. Had a leg up, another leg up. I thought this was a little bit of like a blow off top, short term blow off top. So I tried to anticipate the breakdown below the 20-day moving average here. Actually, like the first trading of January and several days after, I just wasted a lot of money. Not a lot of money, but it kind of added up over 3, 4 trades. I did finally nail it, and again I just made back my previous losses. REN, another one. I just felt a little bit of pullback would be in order. It just never pulled back, and still hasn't pulled back since. And this is the only one I didn't make my money back. So another one. So that was the first type of mistake I did. I just anticipated the most extended stocks to have a little bit of pullbacks, and that was my mistake. I just should have waited for confirmation. BIOCs. No, this was a yeah, so mid-January, this was a enormous momentum runner. Came off lows. Traded many times its float. If you look at the 60-minute chart. Put in higher lows the whole day. It popped out of the gate. It went up the first like hour and a half, 2 hours. Made higher lows the rest of the day. And then in the like last hour, it started breaking out of this range. So I anticipated this breakout a little bit. I did 50,000 shares in the mid 160s. And it popped and just came back into the range. Oops, let's see. Okay. And I stopped out break even. But there was really no reason to stop out have that kind of a tight stop. I should have just kept the recent higher low as my stop, like I usually do. But I felt like, this kind of a pattern should have just gone. It's a failed break. It's probably gonna fade into the close, and it put in another higher low, perfect higher low, and it just went higher. Gapped up enormously the next day. Actually went a lot higher in after hours and pre-market, and just again I had 50,000 shares and it went up another $1.60, $1.70. So you can do the math. Could have been a very big trade with a very small risk. Even if I had just kept the higher low as my stop, which I think actually was my initial stop. I just chickened out when the stock came back into range. I had like a 10-cent stop. I ended up taking my loss for like a penny or so. So I lost like $500 on it. So yeah, that was a very big mistake that cost me a lot of money. Sometimes in too tight stops lead you to miss out the real move, and this was one of those times. Now it happens all the time, but it rarely shakes me out of something like a big mover like this. That's just painful to look at in hindsight. So another mistake, or a series of mistakes I made in January. There were a lot of these microcap stocks that pushed, had big moves, big multi-day moves, and then they had big pullbacks. One of them was TBIO. So I did short it on this day here. Now it's a piece of shit. Ran on nothing, just pure momentum. Actually, it ran the same day as Bioc. Oh, actually, it ran a few days later. So I shorted it this day. I was a little bit too early out of the gate. I got eager because I knew that Bioc had a few days earlier just gapped up and crapped out, just faded on the second day. So TBIO I thought was the same scenario, just pure momentum run on this low price microcap stock. I was a little bit eager out of the gate. I lost about 15,000 initially. And then late day, well actually the rest of the day just kept on building lower highs, had a range here that it built on the whole day, and the late day it cracked. And I was short a bunch of shares, but I just failed to add. I saw the range, but I didn't add at the breakdown. And that was a big opportunity cost because the stock went down 50% in the next 3 sessions. Another one was ETRM. Now I only had the intraday borrows on this thing. Now this is the stock that actually sparked the January microcap market. That's the reason all these BIOC and TBIO and those stocks ran. So I did have shorts on this day, the first red day. I didn't have any shorts on the way up, which I guess is good because I probably would have lost some money. And I only had intraday shorts on this day, and I saw some great setups on this thing intraday, and I just didn't take enough size. I played it very small, even though I knew this is a guaranteed pullback pretty much. Usually day 3 and day 4 are the best when you have a stock that is straight up. And I just, considering how big of an opportunity this was, now I didn't know if it was gonna go green on the day, but I knew it had big potential. And I just didn't play it big enough. And I didn't add when intraday, it actually had a breakdown midday. I didn't add on that breakdown. The same mistake as TBIO. And PNAT, this one I talked about on Twitter for several days before the big crack. It's a paid promotion, just straight up, like 50 days in a row, I don't know, 70 days in a row. I did try to short it a couple of times. Um, I took like 2-3 losses, about a couple of thousand each, and then the last finally gap down. Actually, I'm gonna show the intraday chart of this one, or the shorter term chart, like the 5 minute. And it's again, I didn't add when it finally took out intraday ranges. Like this one, I was short overnight some. I did add a tiny bit out of the gate, but I just failed to add on the opening range lows. Like this is a scenario I could have risked like 10 cents on. And I knew this was gonna go down at least $1, $1.50. Because when these OTC stocks, pumps, when they crack, they go down 30, 50, 70% in a day or two. And this was no exception. So I knew this was a big opportunity. I just failed to size in on it. So those were failing to size in on these range breaks, on these micro cap huge runners. That was a big opportunity cost. Cost me a lot of money in missed profits. And then the third kind of a mistake I made is being too patient when shorting real stocks. Like these things are not real, like TBIO, BIOC, PNET, they're all pretty much worthless companies. They just survive by issuing more stock. But I also did short a bunch of real stocks that I got just too patient on. Let's look at this. First one is CC. Or the first one I just want to walk through. Now this thing had some pretty bad hit pieces, pretty compelling thesis, but apparently Citron is getting squeezed bad on this one. Now I was thinking when it had this 3-day bounce, I shorted it on day, actually 3-day bounce. I shorted it on this 4th day when it went, took out opening range lows. It went down about $1 or so from my entry, and I just didn't cover any. Now this is not the kind of stock that's gonna go down 30 or 50% in a few days like these microcap stocks are. These are more likely to do a 5, 10, 20% move. And I had a pretty decent profit, and I just didn't take any off, and I ended up taking a break-even trade on it. Another one is CCJ. I shorted it on this day. Uranium stock had a big run. Flagged, had another big run. Flagged, had another big run. So it was very extended. And on day 3, on this 3rd run, I shorted it. I got a really good intraday entry. And I was up like 60, 70 cents on it. Took very few off. And I ended up taking break even on the rest because I got too patient. You can't be too patient with these real stocks, even if they look very extended, they can very easily bounce back because these are the stocks that have institutional support. They're not on the verge of bankruptcy or anything. They're not pumps. Another one is CNX. This one I actually talked about, I think, in one of my earliest videos. When I started doing the videos, I was up like 15 grand on this one. Took very little off and ended up taking break even on the rest. Got too patient. I wanted a little bit more, and it still hasn't pulled back. I mean, it was up, I don't know how many days in a row. I really thought they would pull back to like low 14s or something, but nope. Did not do that. So PVG is another one. This one runs with gold and Nugget and Chainug and all of these. I had it had a leg up, then another leg up 3 days in a row. I shorted on the 4th day, had a big profit going on, covered very small. I thought this thing would pull back to the 50-day. The next day just gapped up, ran, stopped me out, break even on the rest. Just got too patient. JNOG, this is a gold triple ETF. I shorted it. I've been talking about this one. I shorted when it took out this range here. Had a big profit going on. Covered very small. I thought this thing would break this trend line and go down more, but nope, got stopped out, break even. And all of these trades, if I just had covered a little bit more, I could have easily made another $10,000-$20,000 on the month, but it is what it is. Now my biggest, now these are like not enormous mistakes, but one trade I did that could have turned out really bad or much worse is MYOS. This is like the previous trades I did. I went through the previous mistakes. They weren't like enormous like rule breaker type of trades. They were like shoulda, coulda, woulda kind of types. Looking back, I should have done this, I should have done that. But I didn't really break any rules. Now this one, on this day, I broke a lot of rules. So I went short it on this day. Let's look at the 5-minute chart intraday. Now, there was another stock, like, let's see, this thing was up, I think it was up like 200% when I started shorting it. So there was another stock, I think it was a couple of days before, that was up like 200-300%, and it just faded back intraday a lot, faded back a lot. So I thought these MYOs would do the same. I think I started shorting it, yeah, in the high threes. Now, one thing I did do right is that I did tiny size. Even though I broke a lot of rules, I did this one correctly. I did tiny size, thank God. So the first rule is I usually never short on day one on these runners. Never, ever. So that was the first rule that I broke. The second rule is that I randomly shorted into strength and added into strength. Which is also something I usually never do. Very rarely. Only on like day 3, day 4. And only near the open when there is the biggest emotional imbalance. And the third mistake I made, I didn't cut down size when it took out intraday ranges to the upside. So when I'm short, I usually cut down my size by half or more when a stock is taking out the range to the upside. And I also usually have a set stop, like on this one I didn't. So those were the 3 big rules I broke. But again, thank God I did tiny size, because I kind of unconsciously knew that I shouldn't be doing this shit. But I did like a couple thousand here, couple thousand here, couple thousand here. Before I knew it, I was short like 7,000 shares, and I was down over $2 on the position. I was down like $15,000 or something at one point here at the highs. But I covered most. Oh, actually, I covered everything when it pulled back here before the close, and I covered the last shares when it perked into the close. So I ended up taking a $8,000 loss, and I was down like 15 or 16,000 at one point. So it was just a totally unnecessary loss. And had I done some size on it, I could have been down 2, 3, 4 times that amount. So I used to do this kind of thing a lot in my earlier years, like adding into strength on these momentum stocks, and sometimes, you know, I ended up taking multiple 6-figure losses on these things over the years, and it's just so stupid. There's no reason to do it. It's very easy to avoidable, but sometimes, you know, you just get stubborn, especially when you've been on a big run. You just get, you just start doing dumb shit. Now another one is my my swing trades on UEC and URG, which are uranium stocks. I bought UEC on this day. It looked very good, perfect breakout pattern. And URG also. Oh, URG didn't look as good, but I thought they would have a couple of days of follow through. But obviously didn't. And the mistake here I did was that they were kind of short term overextended. Or actually, these weren't. I thought they would look very good and tight on the 60-minute chart. The risk was very low. But the uranium ETF was very extended. Like, I bought these stocks on this day. Now, had I seen the uranium ETF, so UEC and URG were actually lagging badly to the main uranium stocks. And you know, if I had seen this, that how extended this thing was, and some of the other uranium stocks, I would have never bought those, because this kind of a short is very vulnerable to pullback, and that's exactly what happened. And I just got stopped out for small losses in UEC and URG. I actually happened to see the URA chart the next day, so I was very quick to close the positions, thankfully. One